Hello again, this is Andy here looking at the markets, and I am looking at the currencies. As you all know, I'm talking about here, taking a look at some opportunities that I'm looking at going into this week. And right now, I'm looking at my notes. Looks like I got roughly about 10 to go through. So let's get started. Try to wrap this up as quickly as possible. So the first one I want to look at is the Australian Canadian. This is the Aussie Canadian. And when you take a look at your longer time frame here, this is your quarterly chart. So what I'm paying attention to is this trend line here that I've illustrated. Now, what you're looking at on the furthest bar to the right here is the fact that we are at this level of support. In other words, now that we've returned to this trend line, the question is whether or not we're going to start to work our way back to the upside, and that's really the play that I'm focusing on. As you all know, the emphasis here is to take a look at what the reaction is here at this trend line. Okay, so as you can see, the last time that we've touched this trend line, we've responded very well. And so that's the expectation that I'm looking at here, is to see this market rally back to the upside. And with that in mind, let's see if, the reason that it is jumping out on my radar here is because I'm trying to, I'm looking at this stochastics here to see if this is going to be convergence. And this is where you have a lower low in price and a higher low in the indicator, okay, as you can see here. So that's really what I'm paying attention to there. Let's see if I can draw this out real quick. You have a lower low in price and a higher low in the indicator. And what I want to emphasize here is that what we need to be watching for is to see this market go up, right? So I want to see if this market will break above these highs, but most importantly, this high right here in the stochastics indicator. I want to see if the market can work its way back up above this, and if it can, that is exactly where I will actually take my buy entry when I get the move above this. So watch the Australian Canadian dollar to see if we get some sort of a rally out of it. Now, along those lines, I'm taking a look at the Australian dollar. So here's the Aussie USD, which is coming into the same kind of trend line here. Okay, so you have these lows where if you connect them with the trend line, you can see that the market is trading near the trend line again. This is your quarterly chart again, so this is a very long-term time frame. But what you need to focus on is that this is the potential to be a decent buying opportunity. So on the daily chart here, the problem is that we are still dramatically oversold, and therefore I don't really want to do anything yet. But what I'm focusing on here is to see if we can get some sort of a response down here to see if this market will actually turn back around and start to work its way to the upside. Let's see if this market can kind of stabilize down here and then start to work its way up, looking for some sort of a falling wedge or some sort of a rectangle formation down here, but most importantly, to stop the dramatic downward move. And there was something I was thinking about a minute ago to tie into this, but the other thing is to see the stochastics come off of this oversold area. So keep that on your watch list to see if we start to put in a low in the Australian dollar. Okay, so here's the euro pound, and the euro pound I've been watching because take a look here. Here's your this is your quarterly chart. It doesn't really show it very well, but I'm looking at, I measured this low going back to looks like April of 2017 to the high of July of 2017. We'll see it more better. You're going to see it better here on the weekly chart, right? So you have this low right here up to this high. You have this measurement. And then what you want to do is take your Fibonacci tool, measure this move, and you're going to see here that we are at a 61.8% retracement level. So in all likelihood, what I want to see is if this market can continue this original push, right? So we get some sort of an ABC pattern. Here's your A, here's your B, here's your C, and then your D would be up here, which means that you would want to take a measured move of this line here and then project it off of here, and then that will give you some sort of target over here, okay? Now, what that means in the short term is that we're looking for some sort of a rounding bottom down here or some sort of a buying opportunity, but the most important thing is that if this 61.8% retracement level can hold, then that sets up for a move up to here. And you see here that's something like 1,000 pips or something like that. And it looks like, let's see, 86.92. Right now we're at 87.88, and your risk goes all the way down to, say, 83.5, I think. This is at 83, and let's just call it 83 even. So we're looking at about 500 pips. Okay, so you're looking at 500 pips of risk. And if that means that that's too big of a risk for you, then you either need to size down or you just need to forget about the trade. But 500 pips of risk to make 1,000 pips in reward, that's a 2-to-1 risk to reward ratio, and that's actually a really good trade setup. So what I want to be looking for here is some sort of a rounding bottom here. I notice here that we're getting a good response off of this low. You can see there's a rejection bar. This is a very important indication that the buyers have stepped in. You can see that they did not let the market stay down here on the lows. And on top of that, you have a variation of a convergence here, where you have lower low in price and higher low in your momentum. And also you have it looks like we're getting a cross of the stochastics. Notice here that you have a bullish cross. This is at an oversold level. So this is really important here. As you can see, after you get a cross right here, if the market goes higher, which it did here, then it sets up for a pretty dramatic move. In all likelihood, I'm looking at, what is this, 87 to 90, so there's a possibility of a short-term move all the way up to this 90 area. Pretty decent 300-point move off of this 87, 88 level, and that's probably about a 100 pip risk, right? You would put your risk, your stops underneath the 61.8% retracement level, looking for a target up here at 90 even. So that's about a 300 pip risk. Now the other, that's a short-term trade. The longer-term trade would be risking this 500 pips to get the 1,000 pip winner. So just something to pay attention to here in the euro pound. Let's see, we have the euro yen. Euro yen was it's popping up in my, it keeps catching my eye, because one of the things that I'm looking at here is this quarterly chart, and you can see that we are at a major level of resistance. Now the expectation here is that you should probably be thinking that we're going to hold this and then the market could start to work its way lower, okay? But the problem is that we continue to trade right around this level. So just know that you're at a very important key level. You have, if you were to measure this move from October of 2014 down to, looks like April 2016, you're at the 61.8% retracement level. And then you take a look at the weekly chart. You can see here that we just continue to we're just consolidating right at this level. So top of that, you have the moving averages that are going to start to push this price up. So what am I looking for on a short-term basis is probably a breakout. I'm looking for this market to move higher because you have the weekly moving averages are starting to produce a squeeze, and I think that it's going to push this higher. We're going to see the market push through this 61.8% retracement level. And the reason I'm saying that also is because you look at the daily chart and you see the moving averages still are showing bullish bias, okay? Shorter moving averages above the longer term moving average. And on top of that, you have your stochastic still is not in an overbought territory. Most importantly, you have a little bit more room to run here, but at the very least, be on alert here. So be watching for a break above this, and that'll give you a pretty decent trade that you can take to the upside. Pound New Zealand. So the Pound New Zealand here, when you take a look at the longer term perspective, all right, first of all, I want you to acknowledge, or should we say, be aware that we have had a major low and then push off of this low. We've been dramatically higher over the last couple of months. But the problem here is that we're at the 200 period moving average on the weekly chart. And so I'm watching to see if there's going to be a retracement or a reversion down to looks like at least 188. You can see the 20 period moving average. It's on the weekly chart. Okay, so I'm looking to see if this market will hold here and start to roll over. One of the things that I'm noticing on the other pound pairs is that you're kind of rolling over on those pairs as well. So again, be alert here. Pound New Zealand looks like it might be setting up. The daily chart still is in a very bullish stance, so I'm just kind of being cautious there. But you can see here on the 5-minute chart, for instance, we've started to roll over and had a little bit of a death cross. But again, we need to come off of these highs. So notice here that we're starting to show a deeper retracement on the stochastics. We're no longer embedded, and that is a subtle sign the market is starting to actually run into a little bit of a some headwind here. Okay, so you're going to see either this market is going, watch the stochastics, we're going to start to curl back up, and which that's going to actually push it back up to this two level, the two handle, if you will. Or this market is going to start to roll, and then we're going to start to drop here. But that is reliant on whatever the 200 period moving average on the weekly chart is showing us. So that's why I'm really focusing here on what the 200 SMA is telling us on the weekly chart. New Zealand Canadian. Daily falling wedge is what I wrote in my notes, and this is the same kind of setup here. If you look at this is your quarterly chart again, right? You have a major trend line that the market is trying to violate or trying to push down, and sometimes what you'll see is that the market will come down. It'll shake people out by pushing beyond the trend line, and then all of a sudden it'll reverse. It'll turn back around and then go back to the upside, and that's kind of what I'm expecting here. Is that this move right here has been nothing but a shakeout in that you had this drive down, bounce, push back down, and now we're going to start to work our way up. If this is a fake out, which is pretty much what I'm anticipating. So with that in mind, if you take that into consideration, you can see on the weekly chart, it looks like we're forming a falling wedge, and a falling wedge has a tendency to be bullish. So the question here is whether or not we have completed it. I don't think so just yet, but we're getting close, right? So you have your points of interest here. And I think that this market is probably going to drift down a little bit and then start to work its way up. So if that turns out to be the case, then you're going to have a low here. This 3 area is going to be your stop point. Your entry is going to be somewhere around here. And then your target is going to be somewhere around this 2 point at 91. This is a short-term move, and this will set us up for at least giving us an insight as to whether or not the bulls are starting to take charge of this market, which is what I'm expecting. Okay, so looks like 87, looks like about 200 pips to make about 300 pips. So a little over a 1-to-1, which is fine, not that bad as long as you are managing your risk. And we'll see if this continues to trade. Again, you can see here that the stochastics is starting to come off of the oversold area, and also it is starting to wedge down here. So that's part of the reason why I'm really interested in what's going on here. You can see here this convergence developing. We're coming off this oversold zone in the New Zealand Canadian, New Zealand Swiss franc. So here's the New Zealand Swissy. One of the things that has caught my attention here, this is your quarterly chart. And one of the things here is you're at a 382% retracement level. So if you measure this low from July 2015 all the way up to looks like January 2017, we're at this major level that I think is going to hold, at least for right now. You can see here on the weekly chart that the market is at least been showing a floor for the past couple of weeks. All right, so I'm watching this trend line here, this down trend line, to see if we can break above that down trend line. And if we can, then that's going to be a good setup for you to watch. A lot of times what I'll do is I will see if there's a double trend line break. So I want to see this market break above the trend line, come down, retest the trend line, and then what I'll do is I'll actually draw a trend line, another trend line, to see if it'll break above that trend line. Okay, so this is your actual entry point right about, let's see if I can get this illustrated, right about there is where your actual entry point is. We do have a little ways to go, so this is something to put on your watch list. But the other thing is that I'm not really seeing a true convergence just yet. Okay, we have lower lows, but we don't necessarily have higher lows in the stochastics yet. So still just kind of waiting, but this has been catching my attention here recently. New Zealand yen. So here's the Japanese yen, and what I want to emphasize is that the market, this has been developing a major head and shoulders that I've been paying attention to. But from a short-term perspective, I'm looking at maybe just for this week. All right, if you take a look at your daily chart, this is kind of interesting here. You go and take a look at your daily chart going all the way back to September of 2017. That's this year. Connect these two highs and then project the trend line. And you can see here that we are at this trend line. Now, the problem here is that we are just getting started in the stochastics, and this could actually run higher in the stochastics, which means that you're either at a breakout point or this thing is going to fail. Now, one of the things that I'm looking at here is that on the 5-minute chart, you can see that we actually rolled over here, and we are creating a death cross. Okay, so this right here is a sell signal on the Japanese yen, backed up by the fact that we ran up against resistance at the trend line, and now we're actually rolling over. So one of the key things to pay attention to is that as long as this market continues to roll over, then you definitely want to continue to look short, and your downside potential is somewhere around 76.95. And that's on a very, very short-term basis. I'm talking about the first half of the week, right? So the 200 moving average on the 5-minute chart should probably do something like this. and the price probably come and do something like this. And that's assuming that this level is going to hold. On the flip side, the other scenario is that this is nothing but a shakeout, and then the market actually rallies and puts in a new high and breaks above this level. So you're looking at a potential breakout to the upside. So look here for this market to come back above the 200 period moving average, break above the 200, break above the trend line, and then do the breakout retest. And then we can start to look for a trend line break that we're going to actually enter above the trend line, looking for a continuation momentum there in the Japanese yen. Okay, so there's a pretty decent opportunity here that I think is going to be nice. And if the market continues to roll over, you can anticipate this market probably moving down about 160 points or something like that if this trend line holds, and then even moving lower. The reason why I think it might move lower is because the New Zealand dollar is sitting on its lows, and it's not really able to move off of this low here. You can see the daily chart. This is the daily chart in your top right corner, how the market just continues to trade sideways, and that's indicative of a potential continuation of the downside. Dollar Swiss franc has been on my actually I took this trade last week. We're still sitting in it, and the expectation here is that the market is going to continue higher. This is your weekly chart, and you can see this is the setup that I like for a lot of the other markets, where you get a move off of a break above a trend line. Here's your break above the trend line, then you retrace back to the trend line, then you break back above the new trend line that is established. You can see here, this is the new established trend line. So, looking at the daily chart, on top of the fact that we broke above this trend line, we also held this 50% retracement level, which is very important. And the breakout actually held very nicely, and we continued to the upside. So as long as we continue to hold above these moving averages, I have no problem holding on to this trade and seeing if it'll work its way back up to the parity level, which is the one even level, and possibly even beyond. You can see my first target up here is at 1.0033, and so that sets you up for about another 100 pips from where you're at. That would probably set me up at probably about 150 pips higher from my entry point, which is the break of this trend line. If that proves to be a strong move, then I'm looking for this trend line here to take us further and push us even up to, say, 103. You can see that there's a level up here that I'm paying attention to, but in all likelihood, right now my expectation here is that as long as we can stay above this trend line that we broke above, then might as well just stick with it. So this right here is going to be my channel that I'll be watching. And so as long as we stay within this channel, or as long as we stay above this lower trend line here, then I would definitely hold on to the trade. I will definitely try to stay with it, looking for some sort of consolidation, and then a push up to these new highs in the in Swiss franc. Japanese yen, the other one. So the Japanese yen, we've been talking about this, or I mentioned this quite a long time ago, when the market was down at 108. It looked like it went and it was going to freak everybody out, and I was screaming out that no, this thing is just trying to freak everybody out. Where you can see here, this pushed dramatically down to the 108, and then it pushed back up, and now we've came back to retest the 200 period moving average, and now the moving averages are actually showing strength. You can see here that they're crawling to the upside. Notice how they came down, now they're starting to come back up. So this is a good indication of strength at this point, coupled with the fact that the moving averages on the weekly chart, you can see that we're back above the 200 period moving average on the weekly, and the weekly moving averages are pointing higher. You can see here's So I'm really excited about the yen. I think that it's going to push up to 118, and I think that this market is just setting up for a move higher. We're just getting started, so I don't want to be looking short on the Japanese yen. And on top of that, we broke above this previous high over here back to October, which means that this invalidates any kind of a head and shoulders, right? So if you were thinking that you're setting up a head and shoulders formation, I'm thinking now that it's invalidated with the fact that we are back above this high right here. Okay, so that alone gives me the indication that the head and shoulders play is out the window, and I will probably start to look for more upside here in the Japanese yen. So hopefully that helps you, gives you some ideas about the things that I'm looking for this week. And if you have any questions, don't hesitate to reach out. Otherwise, good luck in your trading. We'll see you at the next update.